Hello Freedom Builders, and welcome here to the Building Freedom channel. Today we're going to look at the stock of the week. I announced last week that I would try and make a stock analysis every single week for those of you interested in a bit of a deeper analysis of my investments. And I got a lot of good suggestions. The stock of the day is Abbvie, and at the end of the video I will tell you if I would like to buy this stock or not. I do not own it right now, but wait a few minutes and you can see if I am interested in buying it. If you like what you see on this channel, then please consider subscribing or liking the video and hit the bell notification and all that so that YouTube can see that this is interesting content and they'll show you some more of it. Very good. Let's have a look at Abbvie. When I look at a stock and I try to analyze if it is worth to invest in, I look at some different topics here. And I look at what I call the qualitative fundamentals. I mentioned that in a video earlier on where I took a technical analysis and compared to qualitative fundamental analysis. And under the fundamentals, I said that there were the qualitative, meaning is it a good management? Are there some good products? What is the future for the products of the company? And then there is the quantitative, which is the numbers, the revenue, the earnings per share and all this. And today I'll both look at the qualitative fundamentals and some basic fundamentals. We'll look at dividend, we'll look at what the insiders do. We will look at price compared to value. I have a special tool for that. We'll look a bit of a short-term view and then of course at the price charts because I am also a technical analyst. The reason why that I'm putting some effort into explaining what I'm looking at here, it can seem quite comprehensive, but it'll go pretty quickly, I think. The reason is that if you are to consider to buy stocks in Abbvie and you're considering doing it for a holding period of, let's say, 1 year, or 2 year, 5 year, 10 year, then you need to know if this is a good and solid company to invest in. And if you are shorter term, if you want to make a quick swing trade for a week or two or a month, then the fundamentals are not quite so important. But I'll go through them here and then you can consider and compare them to your own trading strategy and method. And please remember that I am not an investment advisor, so this is not a buy or a sell recommendation in any way. I hope that is clear. Very good. Let's start with some of the qualitative fundamentals. Just so you know a bit about Abbvie, it is what they call a biopharmaceutical company. And it is a large company. They have revenues of $35 billion per year. And they are originally a spin-off from a company called Abbott. And that was in 2013, I believe, that they spun off from that company, and they are today a very large player in the pharmaceutical business. They have, and that is one of the reasons why I'm looking at a company this way, because I like to know that they have some products that can keep produce profits for them. And here is one of the weak things already when we are looking at Abbvie, because they are quite exposed to one single product. Not as much now as they were just a few years ago, but they have this company called Humira, and right now that is actually making somewhere around 60% of their overall profits from this one product. So the problem with that is that when we are talking pharmaceuticals and drugs, they have a patent lifetime, and this patent runs out in 2023, so that is 3 years from now, where it is going to be an open patent, if you can call it that, so they will get a lot of competition in this area. But they know that, and they have known that for years. So they are, as far as I can tell right now, putting $4 to $5 billion into research and development per year. And that means that they have a lot of interesting products coming up. They have something called Imbruvica and Klexta, I think it's pronounced, and they are actually showing some very good signs of being some new cash cows in the future. So they know they have this Humira problem in the future, so they're working hard to get some new products in. They're also buying new companies. This year they just announced that they were buying a Botox company called Allergan. So they are really growing. They're growing fast. So let's look at some of the fundamentals. Alright, we are at the Stockopedia platform right now, and as I mentioned in a video the other day, this has become one of my favorite platforms for making a quick evaluation of a company. There are many platforms doing something like this, but these are just so easy to use, and they have this up in the top here. They have this ranking with the quality score, a value score, a momentum score, and an overall stock rank. And what I'm looking at mostly is the quality rank, and from on a score from 1 to 99, this is a 94, which is quite amazing. And the overall stock rank, where they are weighing these value and momentum in as well, they have a 98. So this is just about as high as it gets. That is not a guarantee for future profits, and that is a good start to earn. But it is a good filter to say if these are down at 10 or 15 or something like that, it might be something you would consider staying away from. So this looks actually quite well. We can also look at the price here, but I'll get back to that one later. Now, let me just show you some of the things I'm looking at when I'm evaluating quickly if this fulfills my criteria for looking further into. We have here the 12 months forecast rolling, and we have the PE ratio, and that is 9, which is fine. But as you know from my earlier videos, the PE ratio is not my main concern when I'm looking at a stock, because you can have a really good growth stock with a terrible PE ratio, but an excellent earnings per share growth. And if earnings per share is growing at 100% per year, it doesn't matter too much if the PE ratio is too high, because that will come down eventually. So when you take the PE ratio and you combine it with the earnings per share growth expected, I think they have rounded a bit up here, but you get the PEG ratio, which is the PE ratio divided by the growth. And here we get a PEG ratio at 1, which is great in my opinion, because I'm looking for something at 2 or below. So 1 is great. If you see a PEG ratio down at 0.1 or 0.2, that is not necessarily a good sign, but I'll get into that in another video. We can see that the price to free cash flow is great, and the free cash flow is something I'm really looking into. I'll show you that in a second. Quality, return on capital is great, and the operating margins. This shows something about in my opinion, the quality of the management. Can they manage to get revenue dollars down to profit? And they can. We can see also that they have what's called a Petrosky F score at 7, which is also one of my criteria. If we look down here at the financial summary, what I like to see in a company is a steadily growing total revenue. That is nice to see. Of course, there should be something at the bottom line as well, but the thing that they can keep growing their revenues shows at least some sort of strength. They have been on their net profit. You can see that it is a bit, for 2019 and 20, the estimates are quite high, but they are a bit jumpy from 13 to 18. But if we see the earnings per share normalized here, it is an okay rising curve, absolutely. But of course there are some numbers down here with some losses or some declines in earnings per share growth, but it looks quite well in the future here. If you look at the cash flow, and that is really something I'm interested in. Also, a lot of people use the cash flow in the discounted cash flow models when they try to calculate the value. Let me just see here. Yes, you can see that the operating cash flow is rising quite at a good pace here. And of course, then you take the capital expenses and deduct them, and you have the free cash flow. And free cash flow is, in my opinion, king. It is really, really important, because what you have when you have free cash flow is you have money in your hand. And the management of the company can choose to do a lot of different things with this free cash flow. They can put it into research and development, which they do here. They can put it into buying new companies, acquisitions, what they also do. And with the Elegant acquisition, I think they end up at something like $50 billion in yearly revenue. And they can pay dividends, for instance, or they can buy back own shares. So they can do pretty much all the stuff that we as shareholders really like to see. And if we look at the dividends, you can see that they are growing. I'll show you that on another chart in a second. But what we like to see if we are buying this for dividend is that it is steadily growing. And it is. It is not one of these dividend aristocrats, as I mentioned in another video, because they have to have paid dividends, and I can't even recall if it's also have to be raising dividends every single year, but at least for the last 25 years they have had to been paying dividends. And since this only spun off from Abbott something like 6 or 7 years ago, of course they cannot be up in that range yet, but they might be in the future. At least this is a very good dividend graph you see here. The dividend yield is quite good. It is just about 5%, which is quite exceptional. And a thing that a lot of dividend investors forget, in my opinion, is that called the dividend cover. And the dividend cover simply tells us if the earnings per share can cover the dividend payments. So for instance here, we see that we have, let's go up in the top here. We see that we have, yes, here we are. We have the earnings per share up here around 260, 280. And down here we can see the dividend. This is for 2013. The dividend per share was $1.60. So here we can see that the dividend cover is above 1. If it is 1, it means that the earnings per share equals the dividend payment. And we don't want that. We want a dividend cover of, I prefer up around 2. And what we can see here is that the dividend cover has been dropping a bit, but in the estimates for 19 and 20, it will come up around 2, and that is okay. That's what we like. A thing about Abbvie here is if we look at the debt, it has gone a bit sideways here, so it is not rising right now, but it is a high debt level, absolutely. So this is just a quick look here. We can see the interest cover, by the way, is one of the things I like to look at. Meaning, if we just open this up, the interest cover is a measure of how many times a company can pay its interest expenses from its earnings. So pretty much this tells us if the company has any problems in meeting their interest payments, and here at we have almost a 5. So this is not terrible. It's not perfect, but it is hard to have a higher number here when you have an extremely high debt number. All right, let's just look at another. I have the Guru Focus here. They pretty much tell the same, and they have this quite nice summary of financial strength here. That is not amazing, but that is partially due to their debt level. Then we have the profitability rank, where we can see the margins and the net margins and so on looking good. And the valuation rank, I'm not looking too much into that, but I'll get back to that later. They have some neat features here with some good graphs where we can see the revenue and the net income here. We can see the debt level, which has stabilized a bit here. And we can see some graphs of the free cash flow, which is phenomenal here. So what I'll show you here in the Guru Focus is that we have something called, the insider here. That can be good to look at sometimes. If we look at the insider trading here, this of course tells us if the insiders, the CEO, the CFO, and so on, if the insiders in a company are buying or selling stocks. Do they know something? They have to report if they're buying or selling. And we can see here in 18, when the price started to drop, we could see that there were 6 insiders that were selling. And here we can see the numbers of insiders, and here we can see the volume. And you can see here that up in the autumn of 17 and beginning of 18 here, they were selling quite at a high volume here in Abbvie. And right now, here in 19, we can see that they have begun buying again. So now it seems like the insiders are starting to believe that this taking over different very large companies, that has stabilized now, and that we are now at a point where they want their own money to be put into the stocks again. All right, let's have a look here at the fast graphs, and this is a neat little tool showing us how the price, the black line here, the price has developed over time. And we also see the dark green area here is the adjusted operating earnings for Abbvie right now. And what we can't see is now, it's not that we have a terrible long time span to look at, but we can't see that the price has followed the PE ratio of around 14.5 and a growth rate around 15%. It has been following that pretty nicely. Sometimes it is overpriced, overvalued, and then it drops in price and falls below. But I know some of you that have followed me for years may be thinking that I'm not truly into looking at value. But what I am seeing is that if you are investing for the long run, 1 year, 2 years and above, then there is a tendency that the price follows the earnings. And therefore, if we have a company here where we have rising earnings from this point and forward, it is estimates, but we can't see down here. I will get to that in a second, where we can see how precisely the analysts have estimated previously. But here we can see that the stock got quite overpriced compared to the rise that has been seen in the overall earnings. And then it dropped down, and these drops were partially because of some of the acquisitions they made. But now it has started to rise again. We can also see that the dividend has been rising here. So this all looks quite nicely. What I like to see here is in the forecasting. Let's just see here. This is the average multiple, meaning the PE here. Let's just remove this one. A PE of around 14 on average it has been running on over time. And we can see that if it should go up to that, and it has been doing that previously, let's say it gets up and hits the price earning around 14 in a couple of years, then we will actually be making something like 33% per year, including dividends and everything. It's not certain that it goes up here, but let's just have a look at the historical CAGRs here. What we can see here is that over time, it has been growing at some very nice numbers. The last year, extremely high numbers, but let's just choose the lowest numbers. That is over the last 8 years here. We can see here that they are plotting some some growth rates in here. And if we should be going up at this 13.5%, 15%, then we can see that we are up around 30-40% per year, all inclusive for the next 2 to 3 years here. We can also see that if things should go a bit slower, and it is good to take a look at that as well. Let's say it can only maintain a growth rate of 10.5%, then we will still be making 24% per year. And even lower, at a growth rate of 9, we'll still be making 15-16% per year, which is actually quite decent. We can see that The analysis numbers are quite good. We can see that they have been hitting, the company has even been outperforming or hitting the targets. There have not been any negative surprises here. So that is quite good, and that is something I like to look at to see if they keep up some decent growth numbers and the targets as expected are hit, then what can we estimate our earnings to be? Very good. If we look at the very short run, I often look at tip ranks, and I suspect many of you know that, but that is basically a website that are collecting a lot of analysis, a lot of financial bloggers and so on, what they think of a company over the next 12 months. I'm not looking too much into their estimates, but I like their new stock analysis thing here that goes from 1 to 10. This now is 10, and what they do here is that they look at the overall analysts. They are recommending a strong buy. The blogger opinion, and you can go in and look at the details, what the bloggers are saying about it. You can read their analysis of the stock, so you might get some good hints and angles that you hadn't seen before. Hedge fund activity, I like this one. This one is increasing. I'm not sure why they don't have any insider activity mentioned here, because we could see at Guru Focus that the insiders have been active. We can see that the general tip rank investors are positive. The news sentiment, and this is why I call this the short term, because this is the last couple of weeks where we can see, have there been any positive or negative news stories here, and we can go down and see if there are any news that either should lift the stock or should bring it a bit down. The technicals are okay, and they don't have anything on the fundamentals here, but this overall look very good. I don't use this as a deal breaker or maker. I'm using this to get an idea, is this the right timing? If there are some really bad stories out right now that I hadn't picked up somewhere, this is where I get this, and I get a good feeling that if there's a really strong momentum into the stock from investors, hedge funds, insiders, that can help lift the stock. All right, so let's have a look at the price. And here, of course, I use the trading view. And what I do here, let's just have the weekly chart only. What I do here is that I'll put a trend channel on here, and what I use here is a regression trend channel. I'll make a video about that later, but just shortly, this is a statistical tool where I don't have to guess what tops or bottoms are the important ones. This just draw what is called a regression line in the middle, which is a statistical tool, and it is putting 2 standard deviations in plus or minus here. You might know that from Bollinger Bands or some other, but this is just to get some sort of idea as statistically, is this in an up or a downtrend? And I like to see when it can break this regression channel, and it did this some weeks ago. Then I have 2 indicators down here that are important. This is just a simple RSI. I call it an RSI trend indicator. A lot of investors and traders use the RSI to see if a stock is overbought or oversold, as to try and guess if it should revert soon. I'm not doing that. What I'm using RSI for is that if it is above 50, then I say it's in an uptrend. And the RSI and a lot of the indicators, there are videos coming up on these soon. But the RSI, just to keep it short, I'm using as a trend indicator. Above 50 is in an uptrend. The RSI indicator you can find in every single charting tool worldwide. It is one of the most used indicators at all. The other indicator here is a thing I have in TradingView, and I'll make a video about this single indicator soon where I'll link to it. But what we see here is what is called a comparative relative strength indicator. So the gray line, meaning this thin gray line here, is telling us how the stock is doing compared to an underlying index. So in this case, we can see that I have chosen the SPY, meaning that is the S&P 500 ETF that I am comparing to. So when this gray line is going up, it means that the stock is going up faster than the index. We could see a rising line here at the same time when the stock were going sideways or maybe dropped a bit. But that would just tell us that the underlying index would be dropping more, so that this is outperforming even though it is falling a bit. I hope that makes sense. So what I'm having here is that I'm having the comparative relative strength showing that it has been doing better on a weekly chart the last many months here. Now it has just flattened out a bit, but that doesn't concern me too much. What I have here is two moving averages, a 10 and a 50 moving average. A 20 and a 50 moving average on the CRS, the comparative relative strength line here. And when this comparative strength line can be above both of its moving averages, I'm saying that the stock is in a green zone if it is also above 50 here on the RSI. So what this shows me is that we are in an uptrend, and the uptrend is stronger than the uptrend in the overall market. So we have a break of the trend channel. We have a green zone stock here that is showing some significant strength. And right now it is just, well, it's not actually retracing. It's just taking a short break. And what I am looking for here is just a bit of a positive move. And I think actually I will buy this stock this week, unless the market tanks completely and drags this was down as well. So when I'm looking at value, as I showed you in the fast graphs here, if we just have a look at the historicals, where I'm saying, well, there is some very good potential of moving up towards this area here. Somewhere around between 140 and 170 maybe in a couple of years. And right now we are down here just about 87 here. So there is some very good potential and some growth here. And all the fundamentals are pretty much checking out. There is the pattern thing, but that is 3 years out. So I'll just have to keep up to date with the news on that. And then when all of this checks out, and I can see at the same time we have a stock where all of the big players are coming in. Now, how can I say that it is all of the big players? I cannot say that for certain, but when I'm looking at a weekly chart, and remember every single bar here is a week's worth of data. When I'm looking at that, and the stock can outperform a stock of the size of Abbvie, which is a huge company, when that can outperform the overall market for several weeks in a row, it means that there are some really big players coming into the market and buying this stock. And I'm not trying to be smarter. I'm not under the illusion that I'm smarter than everyone in the market. Not at all. I normally compare myself with a little flea on the back of an elephant. So all of the elephants are all of the big players in the market, and I'm just the little flea jumping from elephant to elephant, trying to find the strongest elephant that right now is running the fastest. So right now Abbvie is showing some really good signs, and I think that we are at a place where Abbvie could be a very interesting buy. And as I said in the beginning, this is not a stock advice for you. This is my opinion, and I'm telling you about my decision process. And right now I'm at a point where I am pretty sure that I, in a very short while, will buy some Abbvie stocks to my portfolio. You can buy it because you think it's a great growth case, but you can actually also buy it because you like the dividend payouts, as I showed you. There's some decent dividend cover, but the dividend yield is up about 5%, and it is growing at a very nice pace every single year. So if you are a dividend investor, this should absolutely also be a stock that you could consider. So also a single thing more, take a look at your portfolio. That's just a bit of hint or a bit of advice here, and make sure that you are not all stocked up in pure pharmaceuticals, because if you are that, I would not recommend you taking on Abbvie as yet another pharmaceuticals, not before you sell some of your other pharmaceuticals out. I'm not recommending that you have more than 20-25% placed in one sector. So make sure that you are not piling up in all pharma stocks, but that you're diversifying a bit out in different sectors. But as I said in the beginning, I would tell you in the end of the video if I were to buy the Abbvie stock. And I think I am. I'm very intrigued by the business, by the numbers, pretty much by everything in this company. I really like it, and all of my criteria are saying buy. So I think I'll buy Abbvie. I'll let you know in one of the coming videos and on the Facebook page for Building Freedom if I buy it. But you can take a look at it with your own tools and methods and strategies and decide for yourself if this is a risk you are willing to take. I hope this made sense. The video got a bit long. The upcoming stock of the week videos will be a bit shorter, but in this video I explained a lot of the core concepts. So I hope that is okay and I didn't get you too tired. Remember, if you like the video and the channel, hit the like and subscribe button. That would really mean the world to me. Thanks for now, and take care of your money out there. Bye for now.